Before we dive into today's episode, we want to emphasize that the content provided in this podcast is for informational and educational purposes only. We are not financial advisors, and the information shared here should not be considered as professional financial advice. Always consult with a qualified financial professional before making any financial decisions. So, let's start with this idea. This has been something that I, when I share this with my friends who are not NRIs and who have been living in India throughout their careers, is the exposure we get to markets outside India. We all are currently in Singapore, and it is it gives us exposure to the Singapore stock market. Also, because Singapore is so, I'd say it's in a state of more developed posture, and that is why it has exchanges, very reputable and regulated exchanges, which allow us to trade in the US market as well. So, ऐसे नहीं है कि it's not possible to trade in other markets through India, but the general person who's not in the finance industry does not have as much access or even publicity to those sort of platforms that we are exposed to. So I'd like to get each of your thoughts on it. Let me know what you think about it, what you feel about this idea, or am I just wrong or it's just my circle who's not exposed to it?
So I think broadly my observation is very similar. Generally speaking, folks who are based in India, who've always been in India, they don't necessarily think of it starting their investments keeping in mind global diversification, right? So a lot of the literature that is available in India will mostly talk about, okay, this mutual fund and that stock market and NSE, BSE, etc., individual stocks and so on and so forth, sovereign gold bonds, and this like a bunch of things that are available just within India. The thought process and the journey that it takes just being in India to start your investment journey and then get to a stage where you start thinking about, okay, I think I'm fairly diversified within the country. Now I need to look at assets in a dollar denominated sort of a format, or just look at another geography in terms of basing my investment. I think it is less intuitive for somebody who's always been in India. So that is a natural challenge that requires a little bit of extra cognitive effort to overcome. If you are an NRI, by default, it's sort of built into the system that you will be exposed because you will earn your salary in a different currency. Maybe you have like a provident fund account, or maybe you have some other kind of deductions that are happening, which are getting invested in your current country of location. And then the literature that you get exposed to also sort of makes sure that you are always going to be invested in India because you are an Indian, but you still sort of start spreading your wings around a little bit earlier than somebody who's in a similar position but based in India. So yeah, I think I agree to that. But it's good that people like us are able to talk about this topic, because hopefully that incentivizes or raises awareness for a lot of people who are in our position to start thinking about diversification outside of just one country, purely from an investment perspective.
So totally agree. I'll just give a example of us being exposed to a different currency and how that is pretty beneficial. At least that's what has happened in my stay abroad. When I came to Singapore 10 years ago, Singapore dollar to rupee conversion was $1 equal to 29 rupees. Today it is above 60 rupees. It is just insane. If I would have just kept that money and not invested anywhere, and I would have got double the returns. So yeah, I totally agree. But any other thoughts, Madhvesh, Ishan?
Yeah, adding to Rohit's point, I think there are two other macro factors that which contributes for us like NRIs organically diversifying. One is like the strength of the currency. We know that in the INR has been gaining strength against most of the currencies in the recent past. But even then, like if you compare with the most stronger currency like Singapore dollar or like other currencies as against the US, given its stronger nature, it makes sense to diversify. And as NRIs, as you're already out of India, you want to like keep assets outside of India, like you're pushed to do that. And that's an organic push that makes you invest in like other currencies, look for other opportunities outside of India. Whereas a person being completely like situated in India, like having all their like circle of competence within India, given the financial products available there, there is no natural push to actually move outside of India, adding that to like the currency's strongness. So I think it's like these two factors also contribute to that.
Correct.
Yeah. I'll probably add in one more thing. I think it's important to maybe think about why this is the case in terms of folks in India not being super exposed to that way of thinking, is because if you look at the overall timeline of how the investment industry has matured over time in India, the ability to easily invest outside of the country is a very recent development. Like just 5 years ago, it would have been really crazy, insane amount of paperwork to get the permissions required to start investing outside. Now there are multiple mutual funds and you can do interactive brokers and there's like a bunch of things that you can do. But it's not been easy until very, very recently. And everybody that a normal person would take advice from, your parents, your grandparents, your chachas, mamas, your neighbors, uncles, whoever, nobody has ever been exposed to investing outside of India. So why would you think about doing it if nobody is talking about it around you? You have never seen anyone else do it. And there's hardly any literature that allows you to do it unless you are engaging with a professional advisor, right? I think those are sort of systemic blocks that exist, which are now coming down over time. And it's obviously becoming much more easier. The awareness is there. So I think it's only a good thing that this is happening now, and especially when India itself is becoming such a major power in the global economy. I think it's just more kudos to everybody in terms of being able to diversify now versus earlier on.
Yeah, I was going to make the same point, like that there was a very high barrier to entry when, if you're in India and you want to invest outside of India, given that, like you mentioned, paperwork, you have to work with someone on how does the taxation work. How do I make sure I'm not taxed double when I'm sending somewhere else and then also in India based on the income I'm getting? So all of that kind of becomes a mental block for you to even think about investing outside. I think the other problem is, and this is not just a problem in India, I have seen this with folks who stay in the same country for a very long time. Your circle of competence of businesses you know about tends to become very localized. So even when you see a lot of US investors, they know, and obviously US being a great market for investors, you are very focused on US companies. You very rarely want to venture outside. You see everyone else with a slight suspicion that these guys are not doing the right things, right? Even in India, I'm sure if you ask a lot of people, they wouldn't want to invest in a Chinese company. They'll have their doubts. They'll have hesitance in sort of doing that. But with Indian companies, because you know what those companies are, you feel closer to doing that. So as folks who've lived outside India now, you kind of get exposed to a lot more. Like I didn't, for example, I'd heard of WeChat. I didn't know WeChat had anything to do with Tencent. But when I moved out, I really wanted to understand more about Tencent. Now that's not a business a lot of people in India may have explored or wanted to invest in, say, 5 years ago. And if we go back and look at its chart, we'll see how much that business has grown. But it's just that you're, again, going back to what Rohit was saying, you don't have anyone around you telling you about the stuff. So your circle of competence doesn't really grow if you're just within one country. And that's one thing that Singapore kind of helps with, given that how small it is, you have to keep looking out. Otherwise, if you're in one of the larger markets, you tend to start becoming very localized in your investment thesis. So you're always just thinking about, what can I do here? What do I know here in this country? So that just makes life much simpler. I think the one other cautionary point that I would want to say as folks who are investing from outside, which is what Sid was saying, given how the dollar has changed versus the rupee, if you do convert to rupees when you're investing in India, that is actually a cost that needs to be considered, because even if I'm making a 50% profit in India, but the rupee is depreciating against the dollar that I am earning it, I'm actually losing that value. So that is a cost which obviously we can't predict. We don't know how that is going to go. But if you're seeing the general direction of it, it is potentially a cost that we have to be aware of.
Yep. For sure. So good talk. Thank you for coming together